Good evening, everyone. Time for another silver update. I want to apologize in advance. I am very tired. I'm doing an on-call shift, so staying up all night, etc. So it's going to be a little bit longer than the others because I feel there's really important information I want to read to you from another Livermore article. So I'm going to cut this short and the next thing short, but we've got a nice rising bull market here. You can see we are above the trend line, main trend line. We seem to be forming a nice flag formation, which will probably be a cup formation when we finish. The MACD is rolling over, so we're above this breakout point, although we dipped down some good buy points. So everything's following a normal bull type of situation. Nothing to really be alarmed about. I want to address real quick the controversy that I caused when I addressed Don Harold's post, and I just wanted to say real quick, I'm not really interested in debating about it. I don't really think there's much to be added or learned, so I'm not really gonna accept that debate. I'm just gonna decline that. But I did want to point out that this video that I have questioning his premise and conclusion is at 1240 views, and if we want to jump to the original Don Harold's 972 views. So regardless of what the sock puppets and all the rest say, that it seems to me just a pretty big waste of time. So I'm not really going to address that anymore. It's not that important to me. I did want to go to an issue that has been going on. It's bouncing around a lot now regarding the CFTC hearings, and we've got some pretty big players, Bix Weir and Ted Butler, and a lot of the people that hang their hats on these hearings. And Bix has put out a thing about the 5,000 comments on the CFTC hearings, and he goes through everyone and all this stuff. And I don't really place a lot of emphasis on them one way or the other. They don't really mean anything to me. If they succeed, I guess then at some point silver's going to explode in price, maybe triple overnight. I don't know. If they don't succeed, then we just have cheaper silver for a long time. So I wanted to use that topic to segue into the topic that I'm going to read Livermore on, and that's the similar sort of thing about intervention in markets, because governments do intervene in markets. I hinted at that when I was talking about the hunts last time and read that brilliant anecdotal story from the Zero Hedge contributor about the hunts and how the government really took the hunts to the cleaners pretty much. But anyway, this Livermore entry is about Livermore's own personal experience with the unexpected and the unexpectable. So I'm just going to go ahead and start reading. Among the hazards of speculation, the happening of the unexpected, I might even say of the unexpectable, ranks high. There are certain chances that the most prudent man is justified in taking chances that he must take if he wishes to be more than a mercantile mollusk. Normal business hazards are no worse than the risks a man runs when he goes out of his house into the street or sets out on a railroad journey. When I lose money by reason of some development which nobody could foresee, I think no more vindictively of it than I do of an inconveniently timed storm. Life itself, from cradle to grave, is a gamble, and what happens to me because I do not possess the gift of second sight, I can bear undisturbed. But there have been times in my career as a speculator when I have both been right and played square, and nevertheless I have been cheated out of my earnings by the sordid unfairness of unsportsmanlike opponents. Again, misdeeds by crooks, cowards, and crowds. A quick-thinking or far-sighted businessman can protect himself. I've never gone up against downright dishonesty except in a bucket shop or two, because even there honesty was the best policy. The big money was in being square and not welshing. I have never thought it good business to play any game in any place where it was necessary to keep an eye on the dealer because he was likely to cheat if unwatched. But against the whining welsher, the decent man is powerless. Fair play is fair play. I could tell you a dozen instances where I've been the victim of my own belief in the sacredness of the pledged word or of the inviolability of a gentleman's agreement. I shall not do so because no useful purpose can be served thereby. Fiction writers, clergymen, and women are fond of alluding to the floor of the stock exchange as a boodler's battlefield and to Wall Street's daily business as a fight. It is quite dramatic but utterly misleading. I do not think that my business is strife and contest. I never fight either individuals or speculative cliques. I merely differ in opinion, that is, in my reading of basic conditions. What playwrights call battles of business are not fights between human beings. They're merely tests of business vision. I try to stick to the facts and the facts only and govern my actions accordingly. That is Bernard M. Baruch's recipe for success in wealth winning. Sometimes I do not see the facts, all the facts, clearly enough or early enough, or else I do not reason logically. Whenever any of these things happen, I lose. I'm wrong. And it always costs me money to be wrong. No reasonable man objects to paying for his mistakes. There are no perverted creditors in mistake-making, and no exceptions or exemptions. But I object to losing money when I'm right. I do not mean either those deals that have cost me money because of sudden changes in the rules of some particular exchange. I have in mind certain hazards of speculation that from time to time remind a man that no profit should be counted safe until it is deposited in your bank to your credit. After the Great War broke out in Europe, there began the rise in the prices of commodities that was to be expected. It was as easy to foresee that as to foresee war inflation. Of course, the general advance continued as the war prolonged itself. As you may remember, I was busy coming back in 1915. The boom in stocks was there, and it was my duty to utilize it. My safest and easiest and quickest big play was in the stock market, and I was lucky, as you know. By July 1917, I not only had been able to pay off all my debts, but was quite a little to the good besides. This meant that I now had the time, the money, and the inclination to consider trading in commodities as well as stocks. For many years I have made it my practice to study all of the markets. The advance in commodity prices over the pre-war level ranged from 100 to 400%. There was only one exception, and that was coffee. Of course, there was a reason for this. The breaking out of the war meant the closing up of European markets, and huge cargoes were sent to this country, which was the one big market. That led in time to an enormous surplus of raw coffee here, and that in turn kept the price low. Why, when I first began to consider its speculative possibilities, coffee was actually selling below pre-war prices. If the reasons for this anomaly were plain, no less plain was it that the active, increasingly efficient operation by the German and Austrian submarines must mean an appalling reduction in the number of ships available for commercial purposes. This eventually in turn must lead to dwindling imports of coffee. With reduced receipts and an unchanged consumption, The surplus stocks must be absorbed, and when that happened, the price of coffee must do what prices of all other commodities had done, which was go way up. It didn't require Sherlock Holmes to size up the situation. Why everybody did not buy coffee, I cannot tell you. When I decided to buy it, I did not consider it a speculation. It was more of an investment. I knew it would take time to cash in, but I knew also that it was bound to yield a good profit. That made it a conservative investment operation, a banker's act rather than a gambler's play. I started my buying operations in the winter of 1917. I took quite a lot of coffee. The market, however, did nothing to speak of. It continued inactive, and as for price, it did not go up as I had expected. The outcome of it was that I simply carried my line to no purpose for 9 long months. My contracts expired, then I sold out all of my options. I took a whopping big loss on that deal, and yet I was sure my views were sound. I had been clearly wrong in the matter of time, but I was confident that coffee must advance as all commodities had done, so that no sooner than I had sold out my line than I started to begin to buy again. I bought 3 times as much coffee as I had so unprofitably carried during those 9 disappointing months. Of course, I bought deferred options for as long as I could get. I was not so wrong now. As soon as I had taken on my trebled line, the market began to go up. People everywhere seemed to realize all of a sudden what was bound to happen in the coffee market. It began to look as if my investment was going to return me a mighty good rate of interest. The sellers of the contracts I held were roasters, mostly German names and affiliations, who had bought the coffee in Brazil, confidently expecting to bring it to this country. But there were no ships to bring it. And presently they found themselves in the uncomfortable position of having no end of coffee down there and being heavily short of it to me up here. Please bear in mind that I first became bullish on coffee while the price was practically at a pre-war level. And don't forget that after I bought it, I carried it the greater part of a year and then took a big loss on it. The punishment for being wrong is to lose money. The reward for being right is to make money. Being clearly right and carrying a big line, I was justified in expecting to make a killing. It would not take much of an advance to make my profit satisfactory to me, for I was carrying several 100,000 bags. I don't like to talk about my operations in figures because sometimes they sound rather formidable. People might think I was boasting. As a matter of fact, I trade in accordance to my means, and I always leave myself an ample margin of safety. In this instance, I was conservative enough. The reason I bought options so freely was because I couldn't see how I could lose. Conditions were in my favor. I had been made to wait a year, but now I was going to be paid for both my waiting and for being right. I could see the profit coming fast. There wasn't any cleverness about it. It was simply that I wasn't blind. Coming sure and fast, that profit of millions, but it never reached me. No, it wasn't sidetracked by a sudden change in conditions. The market did not experience an abrupt reversal of form. Coffee did not pour into this country. What happened? The unexpected. What had never happened in anybody's experience, what I therefore had no reason to guard against, I added a new one to the long list of hazards of speculation that I must always keep before me. It was simply that the fellows who had sold me the coffee, the shorts, knew what was in store for them, and in their efforts to squirm out of the position into which they had sold themselves, devised a new way of welshing. They rushed to Washington for help, and they got it. Perhaps you remember that the government had evolved various plans for preventing further profiteering in necessities. You know how most of them worked. Well, the philanthropic coffee shorts appeared before the price-fixing committee of the War Industries Board. I think That was the official designation, and made a patriotic appeal to that body to protect the American breakfaster. They asserted that a professional speculator, one Lawrence Livingston, had cornered or was about to corner the coffee market. If his speculative plans were not brought to naught, he would take advantage of the conditions created by the war, and the American people would be forced to pay exorbitant prices for their daily coffee. It was unthinkable to the patriots who had sold me cargoes of coffee they couldn't find ships for, that 100 millions of Americans, more or less, should pay tribute to conscienceless speculators. Let me pause here real quick. Keep this term in mind, speculators. You're going to see that when silver skyrockets. They're going to call you a speculator. Trust me on that one. Anyway, they represented the coffee trade, not the coffee gamblers, and they were willing to help the government curb profiteering, actual or prospective. Now, I have a horror of whiners, and I do not mean to intimate that the price-fixing committee was not doing its honest best to curb profiteering and wastefulness, but that need not stop me from expressing the opinion that the committee could not have gone very deeply into the particular problem of the coffee market. They fixed on a maximum price for raw coffee and also fixed a time limit for closing out of all existing contracts. This decision meant, of course, that the coffee exchange would have to go out of business. There was only one thing for me to do, and I did it, and that was to sell out my coffee contracts. Those profits of millions that I had deemed as certain to come my way as any I had ever made failed to completely materialize. I was and am as keen as anybody against a profiteer in the necessaries of life, but at the time the price-fixing committee made their ruling on coffee, all other commodities were selling at from 250 to 400% above pre-war prices, while raw coffee was actually below the average prevailing price for some years before the war. I can't see that it made any real difference who held the coffee. The price was bound to advance, and the reason for that was not the operations of conscienceless speculators, but the dwindling surplus for which the diminishing importations were responsible. And they in turn were affected exclusively by the appalling destruction of the world's ships by the German submarines. The committee did not wait for coffee to start, they clamped on the brakes. As a matter of policy and of expediency, it was a mistake to force the coffee exchange to close just then. If the committee had let coffee alone, the prices undoubtedly would have risen for the reasons I've already stated, which had nothing to do with any alleged corner, but the high price, which need not have been exorbitant, would have been an incentive to attract supplies to the market. I have heard Mr. Bernard Baruch say that the War Industries Board took into consideration this factor, the ensuring of a supply and fixing prices. For that reason, some of the complaints about the high limit on certain commodities were unjust. When the coffee exchange resumed business later on, coffee sold at 23 cents. The American people paid that price because of the small supply, and the supply was small because the price had been fixed too low at the suggestion of philanthropic shorts to make it possible to pay high ocean freights and thus ensure continued importations. I've always thought that my coffee deal was the most legitimate of all my trades and commodities. I considered it more of an investment than a speculation. I was in it over a year. If there was any gambling, it was done by the patriotic roasters with German names and ancestry. They had coffee in Brazil, and they sold it to me in New York. The price-fixing committee fixed the price of the only commodity that had not advanced. They protected the public against profiteering before it started, but not against the inevitable higher prices that followed. Not only that, but even when green coffee hung around 9 cents a pound, roasted coffee went up with everything else. It was only the roasters who benefited. If the price of green coffee had gone up 2 cents or 3 cents a pound, it would have meant several millions for me, and it wouldn't have cost the public as much as the later advance did. Postmortems and speculation are a waste of time. They get you nowhere. But this particular deal was a certain educational value. It was as pretty as any I ever went into. The rise was so sure, so logical, that I figured that I simply couldn't help making several $1 million, but I didn't. On 2 other occasions, I've suffered from the action of exchange committees making rulings that changed trading rules without warning. But in those cases, my own position, while technically right, was not quite so sound commercially as in my coffee trade. You cannot be dead sure of anything in a speculative operation. It was the experience I have just told you that made me add the unexpectable to the unexpected in my list of hazards. And he goes on. I encourage you to read this. The reason why I'm reading this is I think it's relevant today with the request of the silver longs to have intervention in the markets, being the CFTC and et cetera, et cetera. So I don't think it's going to happen, but it's really important to understand that the unexpected can occur. I think if you want to prepare yourself for the unexpected, you should read my Office series that deals with some of the circumstances that can occur. We are in a similar situation with silver that Livermore was facing with coffee. It's actually more severe. With coffee, it was just a delivery problem due to German submarines that were sinking the shipping, and they just couldn't get the coffee here. And the shorts, they'd sold it to Livermore in South America, but they couldn't deliver it to North America. So it was a temporary thing, and they intervened. But the situation in silver is actually far more drastic than the situation in coffee that Livermore dealt with. The world's governments are simply out of silver, and their attempt to suppress the price to support fiat currencies has painted them into a corner to where they have, because of supply and demand, they have forced a situation where there will be an explosive price rise in silver that will take it to triple digits and beyond, and you can expect the unexpected. When silver rises into triple digits and in quadruple digits, I don't know what they're going to do, but it's going to be something unexpected. So we'll talk to you next time.